Imagine capturing gains while you sleep, waking up to profits every single day. Sounds too good to be true, right? Well, it's not. In this video, I'm going to reveal one of the most powerful and overlooked strategies that most traders completely miss out on. This isn't one of these high-complex, high-risk approaches where you're glued to the screen all day long, sweating over every single little move and watching every tick. It's simple, yet very effective. I've been using this strategy to achieve higher win rates than most of the overcomplicated nonsense strategies out there that leave traders frustrated. And trust me, this strategy captures profits without riding the roller coaster of intraday volatility. While most traders are stressing over breakouts, fakeouts, you will be operating with a very clear, repeatable plan day in, day out. Now, this isn't some magic bullet or secret indicators formula. It's a very simple yet very clear strategy, and it's proven to work, and I will share with you the exact back-tested data. The strategy is so simple that you don't even need to know how to read a chart. In fact, all you need to know is how to read the clock. By the end of this video, you will be able to start using this strategy right away, and you will be able to take advantage of this hidden opportunity. Now let's get started and dive into the details. Okay, so let's get into the details. We're going to be focused on the S&P 500 index, and I would like to structure this video in 3 sections. Number 1, I would show you the exact rules so that you know what to look for. Number 2, I would like to share with you the back-tested data over the past 2 years so that you feel confident and know why this strategy is so powerful and real results and numbers. And number 3, I would like to give you some actionable steps so that you know exactly what to look for and how you can start using that strategy right away. But before we start, did you know that most traders think that the S&P 500 gains happen from intraday trading? The truth is that 70% of the S&P 500 gains happen from overnight gap ups and trading. That the majority of the returns are captured overnight and not during the day. This overnight drift is where the real money is made, and that's exactly why this strategy is designed to take advantage of these overnight moves, locking in profits, while most traders are focused on the wrong part of the market. Now you might be wondering, why are we focused on the S&P 500 and why actually buying and not shorting? The answer is the historical behavior of the S&P 500 itself. The S&P 500 is a unique index that reflects the largest and most resilient companies in the US economy. And if you look at the data, the S&P 500 has had a consistent upward drift over decades, meaning it has a natural tendency to rise over time, especially in overnight trading. This upward drift is driven by global demand for US equities, and while the US market is closed, most international investors and traders are buying stocks and buying the market, pushing the price to go higher. So if we look at this chart, you see the cumulative results of buying the S&P 500 overnight from 1993 to present. And studies show that nearly all the S&P 500 gains since 1993 have come from holding overnight. So if you had only traded that instrument and bought at the beginning of the trading day, your cumulative returns would have been close to zero. So the overnight session, however, compounds into a significant long-term gains. And so this is the uniqueness of the S&P 500. Most other assets like individual stocks or different indexes don't exhibit the same predictable overnight behavior. And so by focusing only on buying at the close and selling at the open, we're tapping into a pattern with historical data and strong data backing it. You know that history is showing you over time this is a profitable and reliable strategy. Okay, let's break down the exact rules. In fact, this is probably the easiest strategy that I've ever seen, because you don't even need to know how to read chart. You don't need to know anything about technical analysis. All you need to know is how to read the clock right. And so the reason for that is because we're going to be buying the S&P 500 before the close, 5 minutes before the close, so 3:55 p.m. EST Eastern Time, and we're going to be closing our position at 9:30 in the morning the next day. So 9:30 a.m. Eastern. This is the time zone in the US where the stock market opens. So if you are somewhere else in the world, you need to convert to your time zone. And I prefer personally to use the ES futures, which is the S&P 500 futures. If you have a very small account, you can use the MES. The point here is that I just feel a little more comfortable knowing that the overall futures are trading overnight. But if you prefer to use the ETFs, you will achieve the exact same results with the ETFs as well. So let's take a look at the past 5 days and what would have happened if you traded that overnight strategy. Each box here represents a trading day, and you can see also the volume. Of course, throughout the trading day you have higher volume, and this here is the open and this is the close. So this here is as well the open and the close. So if you bought right here at the close at 3:55 p.m. on this day and you closed right at 9:30 your position, your first trade would have been with a negative. So you start out the negative the last week. If you continued to follow that strategy, and again, you're buying at the close 3:55, you're buying right here and you're closing the next day, which is here, you would have been one profitable trade. Then if you continue doing that strategy over the next days, let's say you bought here, which was on Friday, you bought at the close, you closed right at the open, you would have had one positive trade. And so that's the rules. You're buying at the close 3:55 and you're selling at the open. And we're only focused on the S&P 500, no other assets, nothing else. Now let's go ahead and see how the exact backtest data looks like, because here I can show you only the last 5 days on my chart, but I want to show you more results so that you feel more confident with that strategy and you see that is backed with real data. By now, if you're an experienced trader, you probably already ask yourself, well, what about the stop loss? Where am I supposed to put my stop loss? And the truth is, this strategy does not have a stop loss. And I tested this strategy with trailing stop, with moving the stop loss towards break even. And I also tested it with ATR, volatility index, all kinds of different filters that actually restricted the strategy and made it worse and produced worse results compared to just using it as it is, buying it the close and selling it the open without stop losses. Now, I know that might sound scary, especially if you've been trading for a while, but the reason we're doing that with the S&P 500 is because it is a very, very stable instrument and you will have not many gap downs or instability on the market. And so the test that I've been running here is from 2023, March of 2023 to 21st of October 2024. So almost 3 years. And as we can see here, we have 61.62 profitabilities. So 61% profitability is actually already pretty good. And you have profit factor of 1.2. And of course, because you're not using stop losses and you have strict timing rules with buying at the close and selling at the open, sometimes you will experience drawdowns. That's absolutely natural and part of each trading strategy. But the point here is restricting a strategy, putting more stop losses, more indicators, more rules can restrict it overall. So in this example, it's very clear that keeping it simple allows the strategy to work its way and capture the biggest gains throughout the overnight session. And so there is here the list of the trades. You can see as well some of the losses. Of course, as I mentioned, you will have losses. It's absolutely natural, but overall the point is that this strategy is winning and overall it's profitable, and only by buying at the close and selling at the open, you will be better off than most of the complicated strategies out there, especially if you don't have time or you don't want to deal at all with technical analysis. So now that you know the rules, now that you know the backtested data, it's up to you to start making money off that strategy. Personally, I like focusing on the ES, the futures, and I personally avoid trading through bear markets, even though over time this strategy has worked also through bear markets. I just prefer to not be at risk. I feel more comfortable with not having a long position while the market is in a downtrend. So I would avoid these phases of downtrends or extreme volatility, but you can give it a try, backtest it yourself or test it in a real environment with very small size. The point here is to avoid damage with using small size because we don't use stop losses. Let me know in the comments what you think, and let me know if you know already about that strategy. And by the way, if you're new here to this channel, we're sending each week a free growth stocks report, so feel free to join our free gains guide list right in the description. Thank you so much for your time and for watching, and I'm looking forward to see you back on our channel soon again. Bye for now.